You know that moment when you realize you've been working hard, saving a little, maybe even budgeting, but you're still not getting ahead. That was me a few years ago. I thought I was being smart with money, but something wasn't clicking. I was stuck in the cycle: earn, spend, save a little, repeat. One night, scrolling through my bank app, I had that quiet but powerful moment of realization. If I don't start putting my money to work, I'll be working forever. That's when I stumbled onto something that changed my financial future: index funds. Let me be honest, I didn't jump into index funds right away. Like many beginners, I was tempted by flashy stocks, hot crypto picks, and stock market gurus promising overnight riches. But the more I researched, the more I realized that real wealth isn't built on gambling. It's built on consistent, long-term growth. And that's exactly what index funds offer. Index funds are not sexy, and that's the best part. They track entire markets like the S&P 500 or the total stock market, giving you exposure to hundreds or even thousands of companies in a single investment. That means you're not betting on one company to succeed, you're betting on the entire economy to grow over time. Historically, they've delivered solid returns of around 7 to 10% annually, even with all the market ups and downs. That's what drew me in: steady, predictable, and historically reliable. Here's what really made it click for me: compound growth. Imagine planting a tiny seed, and over time it grows into a massive tree if you just keep watering it. That's what happens with index funds. The earlier you start, the more time your money has to grow and multiply. I remember plugging some numbers into a compound interest calculator. If I just invested $300 a month into a low-cost index fund with an 8% return, I could have nearly $500,000 in 30 years, just by being consistent. That's when I realized investing isn't about timing the market, it's about time in the market. Before I started with index funds, I was constantly checking stock charts, news headlines, and Reddit forums. I was anxious, reactive, and overwhelmed. But index funds, they're like set it and forget it investing. Once I started investing in a simple, diversified index fund, I could finally relax. I wasn't trying to outsmart the market anymore, I was riding with it. And the beauty of it: index funds are incredibly low cost. While many mutual funds and advisors charge high fees that eat into your returns, most index funds charge tiny expense ratios, sometimes as low as 0.03%. That means more money stays in your pocket, compounding over time. One of the best strategies I adopted early on was dollar cost averaging. Every month, like clockwork, a portion of my paycheck goes into index funds, no matter what the market is doing. Whether it's up, down, or sideways, I'm buying shares. Sometimes they're cheaper, sometimes more expensive, but over time it averages out. This not only removes the stress of trying to time the market, but it also builds a powerful habit. I don't invest emotionally anymore. I invest automatically, just like brushing my teeth or paying rent. It's part of my routine, and that consistency is what builds wealth. Let's be real, picking individual stocks is exciting. It makes you feel smart. But statistically, most people, even professionals, fail to beat the market over the long term. I tried it. I lost money. I bought high and sold low. Sound familiar? Index funds don't try to beat the market. They are the market, and that's their superpower. Over decades, the market goes up, and by investing in broad index funds, you capture all that growth without needing to outguess anyone. That's when I stopped chasing the next big thing and started focusing on long-term wealth creation. Here's something no one talks about enough: investing isn't just financial, it's deeply emotional. When markets drop, it's hard not to panic. When markets soar, it's tempting to get greedy. Index investing taught me patience and emotional control. Because I'm not jumping in and out of positions, I don't ride the emotional roller coaster anymore. I stay the course. I stick to the plan. And that emotional discipline has helped me in other areas of life too, from managing stress to making better decisions. The best part about index fund investing? It's not just about money, it's about freedom. I'm not trying to be a billionaire or drive a Lamborghini. I want time. I want options. I want to take care of my family, retire early if I choose, and live life on my terms. Every time I invest in my index fund, I remind myself I'm not just buying shares, I'm buying future freedom. And let me tell you, that's one of the most empowering feelings in the world. Starting with index funds is easier than most people think. You don't need thousands of dollars. Many brokers now let you start with as little as $5 or $10. Open a Roth IRA, a brokerage account, or even start through your employer's 401k. Look for low-cost funds like VTI, Total Market, VOO, S&P 500, or FZROX, Zero Fee Total Market. Set up automatic contributions. Start small if you need to. Just get started. Because the biggest mistake is not a bad investment, it's never investing at all. So why did I start investing in index funds? Because I wanted to build real wealth without the stress, the guesswork, or the emotional chaos. I wanted a strategy that worked while I slept. I wanted peace of mind, not constant hustle. And I wanted to build something solid, not just for me, but for my future family, my freedom, and my purpose. If you're just getting started, or if you've been struggling with where to invest, consider index funds. They may not be flashy, but they're powerful, and over time, they can change your life. This is Wealth Wisdom, where we turn financial knowledge into financial freedom. If you got value from this video, hit that like button, subscribe, and share it with someone who needs to hear this message. Remember, it's not about being perfect, it's about being consistent. Now go start building your future, one smart decision at a time.